All right, good morning, everyone. It is 8:52 in the morning of March 21st, 2022, and this is my pre-market strategy session. And so, I'm getting into the office a little bit late, so I need to do a little bit of groundwork here, and that is put my risk range signals in for the day. So the bottom here on the 10 year, sorry, is 1.81, and the top end is at 2.24, which means this is the top end of the range. It's pretty stretched here, especially in a time where we're expecting to see rates start coming back down again. I know the Fed is tightening and raising rates, but the economy is signaling something completely different. So that is that. I'm going to go to the futures on this one. So let's see. On the S&P, you've got 44.84 at the top end of the range, and at the bottom end of the range we have 4081. Wow. Tech next up. We've got at the high end on tech 13997, and at the bottom end we've got 12360. Let's see. VIX. On the top end of the VIX, we've got 36.73. So it's a lower high on the VIX. I don't think that'll last long. And on the low end of the VIX, we've got 22.16. And so we're real close to the bottom there on the VIX. All right, let's see. Gold. Well, look at that. Look at that peak in gold. So from a charts perspective, this is not nice. This is a parabolic move, come down, and classically, this would be a dead cat bounce. This would be called a dead cat bounce right here. But the economic conditions we're moving into, still going into the second quarter of 2022, are looking rather dire, not looking too good. So I don't know, this could just be a stutter step, who knows. In any case, the ranges on gold are, let's see, where did you go, gold? Looking for, there it is, 2047, 2047 at the top end, and at the bottom end is 1884. I'd be really surprised to see it go down that far. But yeah, this is generally speaking, this is the area where you want to buy gold on this chart right here. It definitely could go lower from here, but if it does, it's kind of like no big deal. It's going back up as long as the economic conditions continue to go the way they're going, which there's no indication there's any other direction things are going. So, all right, that's oil, or that's gold. Oil. I really don't like. I'm not interested in oil. Let's go to Amazon. So Amazon, top end of Amazon is 32.65, and then the bottom end of Amazon is 2629. 2629. Okay. Tesla. The top end of the range on Tesla is 915. And then the bottom end, the bottom end is 752. All right, this is so on the daily here, we've got this sort of downward wedge on Tesla happening, and that this line right here looks like it's a pretty decent judge of performance here. So I'm gonna go to the 10-minute, put an alarm on it in case it hits it today. That'll be a good spot to short Tesla. And I'm still bearish on just about everything. So yeah, and this is a good spot right here to short coffee. Oil, I think oil is still bullish. Put an alarm on coffee. So yeah, I'm still bullish. Bullish oil, bullish gold, bearish. Generally bearish commodities and bearish equities. So I'll be looking for bearish setups. Now the past 4 days. Let's go to the daily here. I didn't get many setups in the past 4 days here. You can see, I mean, this rip up, these moves up here have been pretty good. I think I didn't trade. I haven't traded much. Didn't trade on Friday. I didn't trade at all. So whenever that was back here, yeah. On Friday I didn't trade at all. On Thursday I got a little bit of action here on Thursday. I got a little bit of action on Wednesday. But other than that, I really didn't trade much last week. I only traded a couple times. You just gotta go with your strategy. And when I wasn't getting signals, I wasn't getting entries, I wasn't taking trades. And that's the way it goes. It's not often I have to sit on my hands, for 3 out of the 5 days of the week, but it happens, and it's part of being a good trader is knowing when to not trade. It's knowing when to not put on risk. Things look like they are definitely coming into the top end of their cycles. I mean, last week was that, triple witching or whatever it was for options expiration. Let's see, the third Friday. Yep, the third Friday, 4th, 11th, and the 18th. And there was an enormous consensus short on the market. So of course, there are people who are covering shorts, and then it gets into this sort of rally into the end of the week where people are like, well, I gotta cover my shorts because or I've got to ditch these options that I've got, whatever it is. And it really takes retail, wipes out retail, and that's the way it works. That's how it goes on Wall Street. Retail typically gets wiped out. And so retail took a beating last week. There's just and I've forgotten, it was above 2 on the Z-score, and I don't remember how many contracts there were, but there were a lot of bearish contracts, and a lot of them were put on in this week right in here, and then they got their faces ripped off in the next week. It's too bad. I hate to see it happen, but I mean, it just happens over and over and over again. And so that Z-score, actually I have that pulled up right here. Let me go over to it. Yeah, so the Z-score went from 2.5 last week to 0.7. So the number of shorts are somewhat in line now with what's considered normal in the market. So that means now the market can go down. It's terrible. That's the way it goes. So yeah, I'm looking for short setups on anything other than gold and oil. I'm looking for short setups on gold and oil. I'm looking for long setups. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.